Hello, welcome to any replayers. If you're a replayer, you can still participate. Always tap on the screen for hearts, and you can follow me on Twitter or Snapchat at joannazarach if you have questions that you would like to answer or you ask and answer. And you can also share with your followers. So for everybody else that's joining, I am going to flip it over. I haven't gotten to the gym yet today. I'm a little bit behind schedule because I got busy. So, but I told you that I was going to cover healthcare costs today, and I'm going to do that. So, this is obviously a U.S. specific conversation. But before I jump into it, for everybody that's new to me or anyone that's new to me or just a reintroduction, my name is Joanna Zarach, and I broadcast every day at 10 a.m. on Money Habits, and twice a week at 5 p.m. on Tuesdays and Fridays. I broadcast about money matters, where I dig into a topic. Hey from California. Hi, Sandeepa. Good to see you on here. And I broadcast and I dive into a topic that's a financial topic that I think is important. And I want to dive in deeper with you guys on it, to be able to focus on it, to answer questions, and to just have a discussion about it. So, today I want to talk about our healthcare costs. And I think one of the things is that, healthcare can be a very intimidating proposition to people. And I think that more people need to pay attention to the composition of healthcare costs, understand how changes, and thank you for the hearts, how changes in the healthcare costs happen, what are the impact that your healthcare has on your taxes, and I should see the typo on here since it, so I wanted to talk to you about that. So the things that we're going to cover today, we're going to talk about first and foremost health insurance, because that's a major cornerstone in your healthcare financing plan. So really that's what I want you guys to develop, is figure out a healthcare financing plan. And I know a lot of people are just like, this is really, when it comes to healthcare, it's such a sort of emotional topic, because it comes with, the possibility of being ill or being sick. And when you're in an emergency yourself, or you have, or medical distress for yourself or for a family member, financial matters kind of fall to the side. And that's why I feel like everyone should have a health financing plan. And that's all it means, is just have an idea of what's going to happen, what would happen financially if your current insurance coverage, if you have it, like how much are you on the hook for? And if you don't have health insurance, yeah, we do, right? And it's one of the new laws that's passed, and I know there's a lot of controversy around it, but it's really so like we all have car insurance, like we all drive cars, and everybody who drives a car in most states, you have to have car insurance, right? And so healthcare insurance, it does two things. One, we all pay into the system, and we already do, by the way, because every paycheck, or if you're self-employed, you pay a Medicare tax. So you're already paying into the Medicare system that pays for health care for the elderly and for the disabled. And we also, through our taxes, fund the Medicaid system, right? And so those, the health insurance and the marketplace that's been created for it is really to make it more affordable and transparent for people to purchase their health insurance. So that's one of the first steps that you need to understand. So when you're purchasing health insurance, and by the way, everyone's purchasing health insurance, even if your employer's paying for it, you're still making the decision to purchase health insurance. So let's talk about that first. So most people experience health insurance through an employer plan. So one of the things that, and I know that we're outside of the coverage election cycle, which is usually November, December, but one of the things that I want you guys to think about is to understand how much your health insurance costs, and not just the premium that you pay or the portion of the premium that you pay, but how much does it actually cost. So most health insurance, so the number, I always try to keep a round number and understand the cost. So I always think of health insurance for a family to cost about $1,000 a month. Now that can vary, because it can be as much as $1,200, or $1,500 a month for family coverage. Why is that important? So as someone who has paid for their own health insurance through an employer-sponsored plan through COBRA, it is something that, in case you lose a job, like if insurance is important, health insurance is an important thing to have. in my view, and you just need to know how you're going to fund it, right? So if you have a really good health insurance coverage, that's kind of how you're funding it. So you're paying into a pool that's going to pay out for your health insurance claims through the agreement that the insurer and the provider have made previously, right? But I want you to really start paying attention. How much does your health insurance cost? If you have a job and it's covered through your employer, start getting curious, right? So if you don't know which plan you selected, every country, right? Like it's an essential thing. And I know we have this, like, is it a service, right? It's supposed to be a public service. Like, how do you, and then how do you control the cost? Because so one of the things about healthcare costs is that, because I've done some healthcare cost studies, is that for most people, unless you have a chronic condition, for majority of people, 90% of your lifetime healthcare costs will come in the last 10 days of your life, no matter what, because the life-saving and sort of life-extending procedures are super expensive. They're very intensive. They require a lot of specialists, a lot of hospital time. So those last 10 days that are getting towards your death, whether you're old or young, those will be the most expensive, because the most interventions will be taken to try to keep you alive. So the healthcare system, like for you and I, for most healthy individuals, we are actually not a huge burden on the healthcare system. Most of us overpay for health insurance. And what do I mean by that? So when I pay $16,000 a year in health insurance, I don't consume $16,000 worth of healthcare. I just don't. In general, I don't. The only time I probably consumed that was when in the year that I gave birth to my twins, right? So all the ultrasounds, all the monitoring, in the actual delivery, and I had no complications, right? So that's especially important. So for people, there are these peaks in your life where you're consuming healthcare. And so also take an understanding and kind of think about it throughout your life. How are you consuming healthcare? So health insurance, for most people, you're probably going to underconsume against your insurance, which is okay, right? Because some of the portion of your insurance is for your catastrophic care, right? And a portion of it goes towards your regular care. And then of course, if you have a chronic condition, that you're sort of a more expensive patient. This is why the Healthcare Act was so important, because before then, if you were a person with a with a condition, there was the insurance companies were smart. They were like, well, you're going to overconsume on your healthcare, so I'd rather not have you on your plan. So thanks. And those people really, their biggest the way that they were going to be insured was under a large employer-sponsored plan. Right, so those changes are impacting our system, and some people were worried that once the Healthcare Act was going to pass, that the doctors' offices were going to be flooded, and we're going to run out of healthcare. Right, we do. We need to be smart about how we spend our healthcare dollars. And so the other thing is, because we do this insurance, we actually have very little transparency as consumers when it comes to what your healthcare costs. When you go to the doctor's office and you have a conversation with a doctor, how often are you so how much is that test going to cost, right? I know that you're recommending it, but is it going to be a $5 test or a $5,000 test? And by the way, you as a consumer don't know, and guess who else doesn't know? The doctor. The doctor doesn't know. They can't answer that question for you. The billing rates that they have are made up. I mean, they made up because they submit them to the insurance, and then the insurance has the negotiated rate. So actually, insurance companies are, in some way, the only one well-positioned to figure out what the rates are. And those are just negotiated rates that the doctors kind of accept, because that's the biggest payer. And the whole payer-provider, the balance is just really... because a lot of them, there are doctors, and not all so a majority of doctors are part of the system because they believe in healthcare, but they also have to participate in the payment system, right? The payer provider system. But there are, if you read the news, once in a while, it'll be an egregious case where there are people who give surgeries to people who don't need them and bill Medicare for it, right? That exists. Fraud in our healthcare system exists, and because we put so much trust in the doctors, and we ourselves are not accountable. Yeah. Well, and like no doctor ever got sued for ordering too many tests, right? So if you're a doctor, like who has a stake in it? And how are you as a consumer going to be like, doctor, yeah, I'm going to pass on that test unless you're paying for it, right? Like, unless you're like, hey, this $500 test is available, but this $5 test will just be just as good. So I feel like as consumers of healthcare, we're like way underinformed. And it's like this huge, like every time there's a lack of transparency, someone out there is making a ton of money out there. And if you see in like the consolidation of hospitals, and don't get me started about the nonprofit status of most hospitals. Like, don't even get me started on that. We're just talking on the healthcare insurance part. So healthcare insurance, okay, where am I? I just want to stay on point. So healthcare insurance, it needs to be part of your budget, whether you pay for it or not, right? Just because it's an employer-sponsored plan, yes, I know, but don't get me started. It's a little bit off topic, and I don't want to get on the rant. Right. It is, and whenever there's lack of transparency, there's money to be made that you and I don't know about. Right, there's a ton of money. As I can tell you, the insurance companies, and one of my favorite movies, The Rainmaker. Like, if you want to, watch and I know it's fiction, but it's such a riveting movie, and you're like, somewhere out there, there's somebody denying claims, insurance claims, health insurance claims, going denied, and you have to fight for your life. And if you have the resources, that's great. But what if you don't? Right? What if you're relying on health insurance to keep you alive, and it's not coming through? And that happens to people a lot when they get all of a sudden they get stuck with multiple $1,000s of bills for life-saving surgeries. And so anyway, so that's why having a financial plan on how you're going to pay for your health care is so important. Health insurance is part of it. Always assume that you may have to pick up entire part of it. Right? And I think that that's the scariest thing, where people are like, I'm, living to paycheck. How am I going to afford $1,000 a month to pay for my family's health insurance? That is part of your financial planning. So if you're, if you're self-employed, right? If you're in business for yourself, or you're a solopreneur, then health insurance becomes one of your line items on what is your profitability of your business. You need to pay for health insurance for yourself. So when you're building out your revenue models and how much you're going to charge and what you're going to live on, make sure that's a prominent line, right? And again, the mark that I use for individuals, I usually say a ballpark of $500 a month, and then families $1,000. And you're like, okay, it's not precise, but when you're budgeting, estimating, I would recommend that. So if you're an employer-sponsored plan, know what that is, just in case you need to do COBRA. No, so the marketplace, no, so you can't negotiate premiums, unfortunately. The way that they're set, each insurance company just kind of sets their premiums for different plans. So you can choose a different plan, but you can't be like, oh, well, I'm not. They're going to look at your profile, they're going to look at that. So if you go in the marketplace, part of your health insurance premium cost is your health and your age, gender, I don't know, whatever they look at, and they see what's the likelihood. They just look at it and say, what's the likelihood of your cost to the insurance company? And because of the Healthcare Act, now they can't discriminate against, they can't price you out. So they used to be able, the reverse of negotiating. They used to be like, oh, you have a chronic disease, sucks to be you. So instead of $300 a month or $500 a month or whatever, that's going to be $2,000 a month for you because you're sick. So you're going to cost a lot of money, right? So that practice was eliminated. But in terms of passing the cost on to everybody, the insurance premiums are increasing at a higher rate than inflation, which means your wages and everything else. So the cost of healthcare is going up. And it's sort of complicated. It's a combination of both advances in medical care as well as the, sort of the complication, the layers, the administrative, right? So there's a lot of reasons. All I'm trying to get to is that, so for you guys, I just want to make sure that you're seeing healthcare and the healthcare you need to provide for yourself and or your family as a line item in your budget, as a line item in your money planning, because it's a reality. And then at the end of your life, if you have a bunch of money, you're probably going to spend it all trying to stay alive or be comfortable, either way. Or if you have a loved one that's either in pain or has a disease, you're probably going to exhaust your finances trying to keep them alive. It's just I want you guys to start thinking objectively about it and planning for it. Okay. So I know it's like a lot of bad news. It sounds like a lot of bad news. The things I also want to talk about today is a couple of accounts that are available to people that I think are underutilized, right? And so, because this is a talk about finance, this is not just healthcare. So, if FSAs or flexible spending account is something that's available a lot through the employer sponsored, so employers will offer that. And what's a flexible spending account? So currently, and the laws, by the way, the rules and stuff change, so you always have to keep up with it. So every person can, I think, contribute pre-tax dollars, $2,500, to a flexible spending account. And basically that's like, it's only good for the year. So for the calendar year, so you have to spend the money. If you spend money on healthcare between January 1 and December 31st of the calendar year, you can access the $2,500 to be reimbursed from it, right? That's how it works. It's use it or lose it account. I know there is some legislation or consideration to make it not so, but currently, with current rules, it's use it or lose it. So if you don't have enough expenditures between January 1st and December 31st of the calendar year, then you might lose some of that money. Now, I always recommend that unless you're like a super healthy young person that never goes to the doctor and has no vision problem, teeth problems, or anything else, you get an FSA. Now, if you don't want to max it out, fine, but you should always have some flexible spending account money. And so I've been maxing it out for a long time. Now that I have a family, it always makes sense. A couple of reasons. One, I have my early childhood dental care was in Eastern European countries, so I have really bad teeth. So I always require some dental work. So at least for me, that will cover it. But any deductibles that you have, any like co-pays and anything can be paid out of that flexible spending account. As well as you can see, I have glasses. So any vision related stuff, whether it's your exam and you don't have vision insurance. So you may actually make a trade-off, say, do I want vision insurance or should I just have FSA money to pay for my out-of-pocket vision exam and my contacts or eyeglasses? That actually might be a better deal. So do the math. So that's my recommendation is to, again, unless you're really, really, really low consumer of healthcare, to do the flexible spending account. If you're gonna just be yourself, maybe, like see your last year, right? Or anticipate, like, do you have, and again, I say dental and vision are two other factors that I would put into it. And if you just have medical and you have pretty good insurance, just put a few $100s in it. But if you have a family, if you're like 4 people, I feel like someone is gonna need something, wear contacts, there's always something that you can use for reimbursing a flexible spending account. Now, make sure you do file the claims, because if you don't, and you usually have, each employer will set a different deadline, you usually will have the first few months of the next calendar year, either like through March or so, to still file the claim, but the expenses would have had to happen the prior year. So the calendar year limitation is important. But the pre-tax benefit of it is huge, right? So it's your marginal tax rates, you're definitely going to save money. Okay. So that's, if you have any questions on the FSA, feel free to ask me. But I'm a big supporter. If that's being offered through your job and you've kind of been skipping over because you don't want to see your paycheck go down, please review your out-of-pocket medical expenses that are a little bit broader than just what is actually at the doctor's, and see if you can take advantage of it. And I would really encourage you to do that. The other account that I think is probably even less understood and less utilized, it's the health savings account. So the health savings account is very different, or somewhat different than a flexible spending account. So the health savings accounts, I think the best way someone compared it was like a Roth IRA. So you put money aside in a health savings account. Although I think you have I have to get the rules right. I'm pretty sure it's tax deductible, so your contributions. But I have to check. But basically, health savings account is an account that, unlike the FSA, which goes away after a year, it's an account that you can build. So you can only have an health savings account that you can contribute to if you have a high deductible plan, right? So high deductible plan, there's a definition. I'm pretty sure it's like $2,600. So you need to, and they change it, right? Every year there's an update to the health savings account. It is a tax advantaged account, right? And you have to be in a high deductible plan. And if your plan meets that definition on what the high deductible plan is, then you can open this account. A lot of times people will, the employer will have an account that you can go through that, so it's pretty easy. think that the right now there's catch-up provisions if you're older, and you can only have it until you're on Medicare. Okay, there's the contributions. So your contribution limit for single people is like $3,350, and contribution limit for family is $6,750, and the catch-up contribution if you're over 55 is an extra $1,000. So you can make a contribution into it. And the interesting thing is you can invest those funds, which are like an IRA. So if you have a high deductible plan and you have a health savings account, it isn't like an investment vehicle that you can use. And then the other thing is that like the funds aren't really monitored or managed. So it's kind of funny, like when you withdraw and it's for a qualified medical expense, you're kind of like, if you've paid a bunch of money and it's really just up to you to keep track of it, and then you can like have a check written to you to reimburse yourself, right? So it doesn't have to be necessarily that you're using the health savings account money to pay the doctor. You can reimburse yourself from that account, and you just have to keep track. So there's no forms. You feel it's kind of weird. I think people get weirded out when there's not like forms and claims. Like with that FSA, that's usually administered by like a benefits organization, but the HSA is not administered. Like it's a little loosey-goosey. It's similar to 529 plans where people are like, where do I sign up to withdraw? They're like, well, you just take the money and then you just say, I used it for education, and you should have some sort of documentation if you ever get audited. But isn't that upfront management? And there are penalties if you are not using that money for medical expenses. If you're going to use it for something else, then it's definitely going to get penalties for you. So that's part. It could be a part of your. It's part of your sort of finance plan for healthcare. So whenever I can, so right now we don't have a high deductible plan that's paired with an HSA because the employer, my husband's employer, offers what's called an HRA, which is like a healthcare reimbursement account, which is money that the employer puts in that we get to use against our high deductible plan. So it's like a little bit of a It's a weird little like account, and it makes our FSA ineligible to cover our medical costs. So it can get complicated. Just be real clear, sort of try to estimate your healthcare dollars and try to get the proper combination. So what do I advocate? I think that if you can swing it, so if you have a little bit extra float, which is a little bit extra money, to go for the high deductible plan. Here is why. So first, because it makes you eligible for the health savings account. And as we know, we try to build as many tax-free or tax-advantaged accounts as possible. So you can potentially be saving all those years that you're healthy into the health savings account plan, right? Now, of course, you have to have the cash flow and the discipline to do it, to contribute into it, and even invest. And you can invest in safe vehicles, but you can invest if you want in the stock market to have it grow. And it's tax-free. And then when you do have a a costly, an expense, you can use that money and it's been there for you. So it's of course one of those things that the forethought of it. So if you're younger and you feel like you don't need it, the high deductible plan and you're not using a lot of the doctors, you may like, oh well, but it's annoying because then I have to pay out of pocket for all my first whatever $2,500. But here's also why it's important. So when you have a high deductible plan, you start paying more attention to what things cost. So it's kind of like, to me, it's a little bit of and it's not really a benefit, but it's something that makes you more aware of how much healthcare costs. Because as a consumer of healthcare, a lot of times I think people are completely oblivious to how much the healthcare costs, because all they're looking for is copay, or sort of their portion, right? Or co-insurance or whatever. So it's usually a percentage. And again, I think it's so important to understand how much healthcare costs, because it's going to become, over time, as you get older, we'll talk a little bit about Medicare, it's going to become a higher percentage of your expenditures, right? When you're elderly, and then, and a lot of people think, oh, once I turn 65, I'm going to have Medicare and I'm going to get all my health care free. Okay, my friends, let's talk about Medicare real quick before I wrap up. So, Medicare is a national health insurance plan that's covering the elderly and the disabled that qualify, that has two parts. Actually, it has more than two parts. So part A, part B, part C, part D. And so most people are familiar, or most people utilize part A and part B. And like part A is included, it's a hospital coverage, and then part B is like the doctor coverage, and you have to sign up for it, and there's actually a premium. So all of a sudden you're like, wait a minute, it's not free, I'm paying for premiums. And the like more recent laws passed that if you have a high, sort of, if your income, your source of money in retirement exceeds a certain amount from like pension, Social Security, and if you're a really good saver from your 401ks or your IRAs, that like your premium's higher. They're like, hey, you're not a poor person, you're not a poor elderly person, so instead of $65 a month, it's $120 a month or whatever, right? That amount keeps changing. So please build in your Medicare contributions for your share of the Medicare bill into your health plan. The other thing is, know that like it's not all just free. There are co-pays, there are exceptions, and the other thing, all of a sudden you're like, oh wait, when I was on an employer plan, we had dental coverage and we had vision coverage. No more dental, right? So your dentistry in old age, and as you know, if you haven't had any dental problems, eventually you will, and you need to make a budget for your dental care in retirement. And if you had, a health savings account, you could probably pay out of that as well, right? So that could hedge your costs against it, and as well as vision, right? So all of a sudden, there are all these people calling you up and like, hey, would you like to buy, retiree dental insurance? And there's all these like Medigap, which is as an extra insurance that they sell you. So it's a premium to pay for those things that you didn't realize weren't free. So you either pay the co-pays or you pay the insurance, and it adds up. It's a few hundred. And Medicare Part D is a prescription plan that was passed under Bush. And again, that's a prescription plan that you purchase to reduce your cost of your drugs, not to make them free, right? So make sure you're adding up all of those streams of costs, because they can get pretty significant. And that's why the sooner you start paying attention to understanding how the healthcare system works, how much it really costs, and what do you need sort of in your current situation, either if you lost your job, or even if you're in between jobs for a couple months, right? Make sure you have the money to cover that insurance premium. If you're self-employed, put it in a budget. It is tax deductible if you're self-employed, so that's a really, really nice perk. And then, so put that in there. And then as well, how are you going to fund all the deductibles, out of pockets and incidentals, and really consider the flexible spending account, the health savings account, and any other things that are offered to you. And as you age, and as your parents age, because like everyone's going through this adventure, and it's like someone ahead of you, they're probably just getting into it, right? Like, so my parents are just getting on Medicare, I think, like my dad is, and so I haven't really talked to them about their experience, right? Like, I don't know what's getting, people don't usually talk about money, right? They don't talk about healthcare bills. They don't say, oh, I got this bill, and surprise, there's like extra deductible on there, or extra copay, or something wasn't covered, and we don't have enough discussion around it to say, wow, this could really happen. Same with like treatments outside your network, all these other fees and all these other costs, just really because it's such a big budget item, but people don't think about it till after the fact. Right. Because being sick or being, let alone dead eventually is really hard, right? Like having a directive and having what happens if they go in a coma, who's like, having those directives. And we'll talk about that. We actually talk a little bit more about sort of some of the paperwork that you may want to have in place. It is uncomfortable, right? And even how much it costs. And it's like, the thing is that we're undereducated about the healthcare costs, and we have a lack of planning. So I'm just really encouraging you guys to do that, to really create, as part of your money plan, to create your healthcare financing plan, and to, as much as you can, utilize the tax advantaged accounts, because it's really going to help you mitigate some of those costs when you take advantage of them. So that's it for today. Is that part of your Thank you. I do appreciate the feedback, Sandeepa, and I do like sharing this knowledge. And I just, again, I don't think people talk about it and they don't think about it, and they just kind of like happens, and bills come in and you're like, oh, I got a bunch of medical bills. It's like, yeah, it can be a really significant part of your budget. So part of your money plan, I want you to have a healthcare financing plan. Start paying more attention on how much it all costs, how much, not just what you're paying, but how much it costs, right? Even if it's just your employer. So when you're evaluating those plans, always take into consideration, I may be on the hook from the premium, and do I want to pay that premium? Because again, Cobra, I've used Cobra many times, and I always was prepared. I was like, you know what? When this ends, whenever it'll end, because more and more we see job turnover, is to be prepared to pay for your Cobra and know those rules too. Because if you're in the middle of something and you get laid off in the middle of health issue, you don't really want to be switching insurances then, right? You don't want to be shopping for it on the healthcare thing. You want to be prepared to pay for it. So like, a year out, like that, make it part of your emergency savings plan as well. So thanks a lot for joining everyone today, and hopefully I will see you again. I'm on tomorrow morning at 10 a.m. So weekends a little more reflective and philosophical on money habits, and then back on Monday with Mint. Always talking about Mint, and I think I'm going to talk about my favorite section, which is property. So I think it's underutilized when you're looking at your total assets, and I look at that. Thank you for joining, and I look at it in a variety of way, and then like next week we're going to have more Money Matters on Tuesday and Friday, 5 p.m. I'm not sure of the topic yet. I got to kind of review my list of topics, and then maybe try to refresh. I'm sure we'll be revisiting. Thank you for joining. I guess always good to see you on here. You've been such a great supporter. Thank you for your time, and I'll hopefully see you tomorrow. Okay, bye guys.